Very good morning, students. Good afternoon, good evening. Hope you're all doing well. Uh, this session, we are about to discuss about the revision test paper for paper 3, CA Intermediate. Hope you have listened to all the classes. And please understand that if you are a Srestha student, you would have revised all the classes, then you are watching this RTP. This is what my assumption. And if you are not a Srestha student, you would have listened to some other classes, some other faculty classes, and you're also watching this RTP's session. So we would be discussing the the respective question. If it is a simple question, I'll explain from the question itself. If it is little bit difficult question, I'll be writing the notes also. So please understand this is only a revision test paper. We are not discussing about the conceptual wise. Like for example, I'm not discussing now how you are calculating economic order quantity, how you are calculating ROL. This is what I'm not discussing here. I am presuming that you have listened to the classes and this is like a revision part. Clear? Right, students? And if you have any queries with the classes, if you're especially stressed student with respect to any, as the exams are approaching, if you have any doubts, please call to us or please text in Telegram or WhatsApp. We would be happy to help you out in clearing your doubts. Okay. There are 15 questions which they have given in revision test paper of paper 3 CA Intermediate Cost and Management Accounting. And majority of the questions we would have done in our regular classes, but we would be doing we would be doing the questions again so that maybe one and a half hour, 2 hours, you will be able to recollect the concepts of the respective chapter. And please understand why it is important to uh, do RTPs and mock test papers. Now, if you see a mock test, normally when you're doing revision, if you open material cost chapter, all the questions you know that is from materials cost chapter. But when you're writing an examination, first question could be from materials, second question could be from marginal costing, and some other question can be standard costing. You need to think it very fast to come from one chapter to another chapter immediately. That exercise you cannot do in the examination. You cannot do trials in the examination. You should do those trials before the examination by writing the mock test papers or some other examination papers. The advantage of is that, okay, now you know one is your time management, you can able to do it. Second one is how fast you are able to, for example, I did now stand costing question on fixed overheads. Next one, I should go to budgets and budgetary control, prepare a cash budget. Third one, when it comes to material cost, I should able to write down the inventory levels. So, and fourth one, if you want, I should come back again to marginal costing. That conceptual fastness that should be there. That is what that is required in 3 hours. For example, the same examination paper, if I give you 6 hours and 10 hours, you can write down very well because you have a time of thinking and writing the examination. That will not happen in 3 hours. So that practice you need to do in the examination, before the examination, maybe by writing the mock test papers or by writing the some other examination series. Okay, right. First question we would be discussing about the inventory levels. So we have done number of questions on the inventory levels. Uh, Maybe if you refer to our materials cost chapter, you will understand how many questions we have done on this uh, inventory levels question. With respect to material cost, the important point is calculation of EOQs and inventory levels. There is one question which is very important is about stockouts. We have done in question number 30 or something. So at different probabilities, different stockouts. So major time, the examiner will focus on these topics in the examinations. So please be focused on those areas. Please do not neglect. And sir, what about the inventory levels? Like for not inventory levels, preparation of inventory register, stock register, stock ledgers. That is of not much important if you go with ABC category. So EOQs and questions on EOQs and inventory levels is the major topic the examiner would focus in the examinations. Mrs. Tanishka Materials Private Limited produce a product which names ESS. The consumption of raw material for the production of ESS is 210 kgs to 350 kgs per week. 210 kgs is minimum consumption, 350 kgs is maximum consumption. Now, 210 kgs per week, 7 days. Now, what is average consumption, minimum consumption per day? 210 divided by 7, 30 kgs. 350 kgs divided by 750 kgs. So, minimum consumption is 30, maximum consumption is 50 kgs per day. And what is average consumption per day? 30 plus 50 divided by 2, 40 kgs. Clear? So 210 kgs per week, which is 210 divided by 7 days. 30 kgs is the minimum consumption per day. 350 kgs per week, that is 50 kgs per day, that is the maximum consumption. And the average consumption is 30 plus 50 divided by 2, which is equal to 40 kgs. Procurement time 5 to 9 days. Minimum lead time 5 days. Maximum lead time 9 days. Purchase price of raw materials 100 rupees per kg. Ordering cost per order 200 rupees. Storage cost 1% per month and plus 2 rupees per unit per annum. There are two factors within the storage cost, that is inventory carrying cost. So inventory carrying cost consists of two parts. First part is which is per month basis. Second part is per annum basis. Per month, 1% on the purchase price. How much amount? 1 rupee. That is how you calculate interest also, right? 1 rupee per month. How much is per annum? Carrying cost per unit per annum. That means if 1 rupee is per month, how much would be per annum? 12 rupees. And what is the average? What is annum cost separately given to? So inventory carrying cost is 4 rupees per unit per annum. Clear? So my purchase price is 100 rupees. Ordering cost per order is 200. Inventory carrying cost 1% per month, which is 12% per annum plus 2 rupees. One is in terms of percentage. Second one is a fixed number. So 12 rupees plus 2. So why I'm taking 12? Provided the purchase price is 100. The purchase price is 200. I would have taken 200 into 1%, 2 rupees per month plus, which is equal to 24 rupees per annum plus 2 rupees per unit per annum, 26 rupees. Okay, so this 1% is dependent on what amount it is dependent on the purchase price. Clear? Right. Consider 365 days a year. You are required to calculate the economic order quantity, reorder level, maximum stock level, minimum stock level, average stock level, number of orders to be placed per year, total inventory cost. Total inventory cost means purchase cost plus associated costs related to purchases. Okay. And H point, if the supplier is willing to offer 1% discount on purchase of total annual quantity in 2 orders. This question also we have done. Sir, maybe by using EOQ, I need to place 10 orders, but my supplier is saying that you order in 2 orders, okay, and I would be giving a discount of 1% on the purchase price. Now we need to consider what is my total inventory cost under EOQ, what is the total inventory cost under this offer. If my cost reduces, I would accept this proposal. If my cost increases, I would not accept it. The answer is no. What should be the counter offer with respect to percentage of discount? For example, by giving 1%, it is not meeting your existing cost. That means the cost is more than your existing cost. Now, what is your option? Your option is to reduce, to give more amount of discount. Now, it could be 2%, could be 2.5%, it could be 3%. That we need to calculate. So, beautiful question covering your EOQ concept, and that to EOQ with carrying cost, new example, and understand the inventory levels and third one is how much discount to be offered if 1% is not acceptable. Okay. So we would be doing so let me open my notepad. One note. Right. Now, what is the questions they are given? So I may not write detailed, so because it is only the marathon session, so on the revision part. So question number one, which is from material cost. So first working note. It about what is the minimum consumption per day? 210 divided by 7, 30 kgs. Second one, maximum consumption per day, 350 divided by 7, 50 kgs. Therefore, average consumption per day, 30 plus 50 divided by 2, 40 kgs, right? Next one, procurement time, the minimum lead time is 5, maximum lead time is 9 days. That is already given. Now, when it comes to purchase cost is 100 rupees per kg, ordering cost is also given, storage cost 100 rupees into 1% into 12 months plus 2 rupees, which is equal to 14 rupees per unit per annum. Right? Now, what is the first question they ask you? First one is economic order quantity, square root of 2AO by C, 2 into what is annual consumption? Sir, if the average consumption is 40, so 365 days into 40, that is a annual consumption, very important. Because we cannot consider the annual consumption based on minimum consumption or maximum consumption. It is proper to consider the average consumption. 365 into 40 and to ordering cost per order 200 divided by carrying cost per unit per annum 14. So how much you are getting, Amma? So 2 into 365 into 40 into 200 divided by 14. So you are getting 645.86 are making into 646 kgs. So that is the economic order quantity, right? Now, second point, it is about the inventory levels. First one, what did I ask you, Amma? Reorder level. Reorder level is sorry, maximum consumption into maximum lead time. What is the maximum consumption? 50 kgs. What is the maximum lead time? 9 days, right? So 450 kgs. So this is ROL. What is next one? Maximum stock level. Maximum stock level, what is ROL plus ROQ minus minimum consumption into minimum lead time. Now, how much is ROL? 450, ROQ 646, minimum consumption 30, minimum lead time 5 days. 30 into 5, so 450 plus 646 minus 150. 450 plus 646 minus 150. 946 kgs, right? Fourth one, minimum stock level. What is the minimum stock level, Amma? Reorder level minus average consumption into average lead time. Reorder level, how much we are getting reorder level? 450 minus 40 kgs into, what is the lead time, Amma? 5 plus 9 divided by 2. 14 divided by 2. So 7 days. 40 into 7. 280 minus 450, which is equal to 170 kgs. Next one, average stock level. We have minimum stock level plus maximum stock level divided by 2. What is the minimum stock level? Minimum stock level is 170. Maximum stock level 946 divided by 2. 558 kgs. Next one. What is the F point? Number of orders to be placed every year. So it was decided to order every time how much economic order quantity? 646. What is the total annual consumption required? 365 into 40 days. So 14,600 kgs. Okay. Sir, if the closing stock, desired closing stock is given, it is not given in this question. If desired closing stock is given, then you need to go with the purchase quantity. That means annual consumption plus closing stock. If opening stock is given, minus opening stock. Okay. If we're assuming there is no opening stock and closing stock, we're assuming the annual consumption is equal to annual purchase. Then we are deciding how many orders to be placed per year. Number of orders we placed every year. So annual consumption 14,600 divided by 646. How many orders? 22.60, which we are putting as 23 orders. Okay. So in the examination, you can write down like 22.6. That is 23.23 orders. Now, total inventory cost. Please understand, from this it is very important. G, H and I points are very important. What is our purchase cost? 14,600 into 100 rupees. Correct? Ordering cost. Normally for ordering cost and carrying cost, if it is EOQ quantity, that is which is associated cost. Total associated cost means ordering cost plus carrying cost. We would have used the formula of square root of 2 AOC directly. Half of that would be ordering cost, half of that would be the carrying cost. But we'll do workout here. 23 orders into 200. Generally at EOQ, you should get ordering cost is equal to carrying cost, but due to these decimal issues, it will be very near. Otherwise, both should be equal. Okay. Please don't get worried about the, please don't get confused, Amma. They didn't ask you total inventory carrying cost. They've asked you inventory cost, that means which is including purchase cost plus associated cost of ordering and carrying cost. Clear? Half of EOQ 646 into 14 rupees. Usually should get both equal, but due to decimal issues, we are getting this. So what is the total amount? 14,69,122. Clear? Now, what is the H point they're asking? Please keep your RTP part. It is better you take the printout of RTPs. If the supplier is willing to offer 1% discount on purchase of total annual quantity in 2 orders, whether the offer is acceptable. Now at EOQ, your cost is what amount? Total inventory cost is 14,69,122. If H point, if my total cost is less than this, I would accept that offer. If my cost is more than that, I will not accept. Okay, let me calculate. New purchase price, 1% discount means 99 rupees. Correct? Now, what is my, because my carrying cost will also change, but the reason is that 1%, which is a variable on the purchase price. If the purchase price changes, my carrying cost will also change. New inventory carrying cost, 99 into 1% into 12 months plus 2 rupees. ₹13.88. I will work out the total inventory cost under new method. Purchase cost 14,600 into 99. 14,45,400. Ordering cost, we are placing only 2 orders. So 2 into 200, 400. That would have affect my carrying cost 1 by 2 into 2 orders means every time how much I should order? 14,600 divided by 2, correct? So, every time I should place order for 7,300 units. So 7,300, 13.88. 50,662. 14,96,462. What is my cost earlier? Sir, under EOQ, my cost is 14,69,122, and at EOQ, my ordering cost and carrying cost is minimum at any level. That is total ordering cost and total carrying cost, which I am termed as associated cost. Whereas in the new one, where I get a discount of 1% on the purchase price, but my total cost, I may have a discount on my purchase cost. Earlier it is 14,60,000. It becomes 14,45,400, but that affected me in terms of carrying costs. So it is 14,69,000. Which is not acceptable. Not acceptable. Now the supplier, I inform my supplier, sir, you are giving me 1% offer, but or you are asking me to procure in two purchase orders, which is not viable for me. Now he has given me an option. Tell how much discount you want, or how much discount. You may ask me, sir, 1% you are saying not, you are unable to take it. This you decide me. You tell me which percent you are comfortable to procure in two orders, so that I will revise my quotation accordingly. Now that we need to work out. So that means I don't know how much discount I'm asking. That discount I'll put it like some X or some Z number. Maybe in RTP they have assumed it to be some Z amount. So we need to go for the counter offer, right? Now that means even after giving discount, I should get my cost minimum. Less than this is very comfortable. Less than this, it is advantage for me. Minimum, it should be 14,69,122. Okay. Here I know what 1%, but I don't know how much I need to offer. That I'll put it as some X percentage. Let discount be X%. Now, what would be your purchase cost, Amma? What is your purchase cost? Cost of materials would be 14,600 into 100 minus X percentage. Okay. So, which would be equal to, I'll assume X as some percentage, 1%, 2%, 3%, or whatever it is that, which I'm writing as 14,600 minus 14,600 X. I assume I'll not let X be the percentage. So if it is 100, for example, 2% on 100 is 2 rupees. So I'll put it as 14,600 X. Now ordering cost is, ordering cost remains the same, which is equal to 400. Now my inventory carrying cost, which is half of 7,300 into, what is the cost here? 100 minus X. Okay. What is my inventory carrying cost per unit per annum? That I'll need to write down here before this. Storage cost 1% on 100 minus X plus 2 rupees. Correct? So into 12 months. Because this 1% is 1 month, which is equal to 12 months plus 2 rupees, which is equal to 14 minus 0.12x. 0.12x half of the inventory into 14 point. So this is the inventory carrying cost. So I'll work out what is my total cost now. So total cost should be equal to, minimum should be equal to how much amount? 14,69,122. Correct? So I'll work out here. 14,60,000 minus 14,600x plus 400 plus 7,300 into 7. 51,100 minus 0.1 by 2 into the 430, 7,300 into 0.12 divided by 438x, which should be equal to how much amount minimum? 14,69,122. So I'll take X one side. So 14,600 plus 438. That's right. 15,038 x is equal to 14 lakh 60,000 plus 400 plus 51,100 minus 14 lakh 69,120. X is equal to 2.818. That means minimum discount should be 2.818 percentage. If it is below this, that is 2.818 means you can assume it to be 2.82%. If it is below 2.82%, I should go with my EOQ. If it is minimum 2.82%, both the options is same. If it is more than 2.82%, it is better I go with two orders. So minimum discount 1% is not viable. What is the minimum viable amount? 2.818 percentage. So this is the very beautiful question, covered majority of the topics of the material cost. Okay. So please write down. If you have time, you just write down. Pause it and write down. So 1% not available. So how much we are assuming to be X percentage? Based on that, we have worked out. And in addition to this question, in materials cost, please be focused on the stock out question and the theory part. The theory part, bill of materials, difference between bill of materials, stores ledger, okay, bin card, and ABC and FSN, VED analysis. You be focused on those topics. So that would be sufficient for the materials chapter. Okay, right. Let me go back to the next question, which is from employees cost. Employees cost. So let us go to the second question. Right, student. Let us go to question number 2. HR Limited is progressing in its legal industry. Maybe this is a new question number which we have not covered in our material, but the conceptual wise we are comfortable. But the question they've asked is good, but let us revise it. Good question. HR Limited is progressing in its legal industry. One of its trainee executives, Mr. H in the personnel department, Mr. H in the personnel department is the executive, has calculated labor turnover rate of 24.92 percentage. We have different methods of labor turnover. We have a separation method, replacement method. Okay, then we have a flux method. So there are different methods in calculation of the labor turnover rate. It is simply the change in the labor ratio, change in the labor composition. That is we call as labor turnover. Has calculated labor turnover rate to be 24.92% for the last year using the flex method. Flex method is joinings plus separations plus replacements divided by average average uh, average employees during the period. Following is the data required provided by the personnel department for the last year. Records clerk at the beginning 810 joined 1620. How many are left, Amma? 90. At the end, how many are there? 2340. Can I write down here how many separations? How many, this is separations left. How many replacements? Out of 1620 joined, 90 is left. That means the replacement would be for 90 employees, right? So 90 is the replacement and new recruitment is 1620 minus 20, 90, 1530. New recruitment. We need to calculate for each type of employees. Human resource manager, opening we do not have, join 30, left 90, closing 60. Normally, this plus this minus this, you should get it. Now we need to do reverse. 60 plus 90, 150 minus 30. 120. So if it is 120 in the beginning, 120 plus 30, 150 minus 90, you are getting closing at 60. Legal secretary, opening I do not have, join 90. At the end, I need to calculate it. Staff attorney, opening, I do not know, it is joining, left, closing. Associate journey, senior staff attorney, senior records clerk, litigation attorney. Employees transfer from subsidiary company. Please understand this important point. The company and the subsidiary are maintaining separate set of books of accounts and the separate personal department. So when I am maintaining separate set of books for my subsidiaries and as well as for holding company, any employees coming from subsidiary, I will treat it as it is a joining. Any employees, if I'm deputing to my subsidiary, I'll treat it as if it is a left. Okay, when you're maintaining separate set of books. Okay, that is a very important point here. So when you're maintaining separate set of books, you whenever the employee comes from subsidiary company, you need to treat it as if it is joined. Whenever you're deputing your employee to the subsidiary company, you need to treat it as it is left because you're maintaining separate set of books because your finance cost is different, others finance cost is different. So other employee cost is different. Okay. Employees transfer from subsidiary company for senior staff attorney 12, senior records clerk 39. Employees transfer to the subsidiary company litigation attorney 90, associate 15. At the beginning of the year, there were 1158 employees on the payroll of the company. That means, including all these, I am getting 1158. The opening strength of the legal secretary, staff attorney, and the associate attorney were in the ratio of 3 is to 3 is to 2. If you know one, based on this ratio, you can calculate for remaining. That also we can do it. The company has decided to abandon the post of litigation attorney. Consequently, all the litigation attorneys were transferred to subsidiary companies. That means my closing balance of litigation attorney would be 0. And they wanted to abandon the post itself. Now, please understand that there are no joinings in litigation attorney. Left is 90. Opening should be equal to how much amount? 90. It should be equal to how much amount? 90. Now, if it is 90, I know my total opening of employees 810 plus 120 and 6 plus 12 plus 90 should be equal to how much amount? 1158. Excluding these three, excluding legal secretary, staff attorney, and associate attorney, what is your strength? Tell me. 810 plus 120 plus 6 plus 12 plus 90. 1038 you are getting. How much you are getting? 1038. Now, what is the remaining balance? Total 1158 minus 1038. How much it is? 120. Now 120 should belongs to what? Legal secretary, staff attorney, and associate attorney. And this is in the ratio of what? Staff. See here, it should be same. Legal secretary, staff attorney, associate attorney. Legal secretary, staff attorney, associate attorney. It is in the which ratio, ma'am? 3 is to 3 is to 2. Now total 120 should be in the ratio of 3 is to 3 is to 2 means 3 by 8. 120 divided by 120 into 3 by 8. So 45. So my legal secretary is 45. Staff attorney is of 3 is to 3 is 45. Associate attorney is 120 into 2 by 8, 30. So that means if I add all these things, which is 810 plus 120 plus 45 plus 45 plus 30 plus 6 plus 12 plus 90 should be equal to how much amount? 1158. Right. Now, did they say about closing? No. What did they ask you? You are required to calculate labor turnover rate using replacement method and separation method. Verify the labor turnover rate calculated under flex method by Mr. H. Now we need to calculate if any number is missing, we need to calculate. Any number is missing. So I think we are able to cover everything, right? Now what we need to calculate is how many are newly recruited in each one. Okay. At the end of the year, there are some numbers we need to calculate. Now see here, legal secretary, opening 45, 90, nothing is left. So it should be equal to 135. 45 plus 30, so closing is equal to 45. 30 plus 30, 60 minus 15, which is 45 is given. So closing, what is closing number? 2340 plus 60 plus 135. 2340 plus 60 plus 135 plus 45 plus 45 plus 18 plus 51. So you're getting 2694. How much you're getting, Amma? 2694. Okay. Now what we need to calculate is about the replacements and separations. So what I'll do is that I'll work out separations separately. Separations is nothing but then I will left. How many separations you have? 90 plus 90 plus 30 plus 15 plus 90. Separation method I can work out tightly. So separation method, average employees, opening employees we have how many opening employees? 1158. How many closing employees? 2694 divided by 2. So 1926 is how many separations you have? You add a number of separation left. 90 plus 90, 180. 30 plus 15 plus 90. So 315. So into 100. So how much you are getting separations? 315 divided by 1926 into 100. How much? 16.36%. 16.36% under separation method. Now let us come to replacement method. Replacement. How many employees are replaced during the period? Okay. So here 90 same got replaced. 90 left, only 30 is joined. That means how many are replaced? Only 30 got replaced. Correct? Only 30 got replaced. Next case. Nobody left. So joining, so no replacement. 30 got replaced. For 15 left, only 30 got joined. That means only 15 got replaced. Nothing. So how many replacement if I see here? 90 plus 30, 120 plus 30, 150 plus 15, 165. How much am I? 165. So under replacement method, 165 divided by 1926 into 100. 8.56%. Now, we need to work out under flex method. Under which method, Amma? Flex method. So if it's, I'll show you this. So this we have worked out. So we have worked out both 8.57, 16.6. Now labor turnover rate under flex method. It could be it is based on joinings plus replaced, recruited, and separated. Separations plus accessions. Accessions means new joinings, including replacements, right? How many employees, if you see directly, so replacement we have worked out, separations, new recruitment. So out of total joint, if I reduce replacement, that would be the new recruitment. If you see the records clerk, total 1620 joined. If I take total joined, whether it can be replacement or whatever it is that. So out of 1620, 90 got replaced. New recruitment is 1530. So I'll take all these three. Total joining is 1620. Next one is 30, which is already given. And legal secretary also is given 90. So it is total joining summa. Okay, including recruitment, separations plus accessions. So separations plus new recruitment plus new replacement. So flex method, number of employees got separated. How many points got separated? 315. Replace plus new recruited. So total joining 1850. So 1851 plus 315 divided by 1926 into 100, 112.46 percentage. What is your labor turnover? 112.46 percentage. That means maximum employees are leaving and maximum employees are getting recruited. So this is simple table. So please understand that these two, if you add, I should get total joining. So under separation method, I take only separations. Replacement method, I can only replacement method. Flex method, I consider both recruitment, replacement, and separations. So if you want for flex method, what is numerator is 1620 plus 90, 30 plus 90, 90 plus 0, 30 plus 30. So we need to work out like that. So 1851 plus 315 divided by average number of employees on payroll. So you would be getting the labor turnover rate. Clear? So this is also a good question with respect to labor cost, but beautiful question. So you need to understand out of box thinking, because you know the replacement method, you know the flex method, you know separation method. Only the arithmetical calculation you should be very thorough. Understood, Amma? Now this is about the employees cost. Now let us go to the overhead chapter. So in employees cost, you have a bonus policy. So please be focused on Rowan's plan, Halsey plan. Please be focused on theory part. And we have labor turnover rate and the cost of labor turnover. Important question. I think question number 1 and 2 in our material. Please be focused on those questions also. Okay. Right. Let us go to question number 3. SC Limited manufactures two products A and B. The company had budgeted factory overheads amounting to 36,72,000 and the budgeted direct labor hour of 1,80,000 hours. So what is your absorption? Simply, if you are working on a single overhead rate, the company uses predetermined overhead recovery rate. How would you calculate predetermined overhead recovery rate? 36,72,000 divided by 1,80,000 hours, which is your overhead absorption rate even in our stand costing, correct? 36,72,000 divided by 1,80,000, 20.4 you are recovering from each production unit under single overhead recovery rate, that too under absorption costing. The department-wise breakup of the overheads and the direct labor hours were as follows. So if I go with individual, department pi, my recovery rate is 28.8. Department Q, it is 12 rupees. But when I go with single overhead recovery rate, I'm getting how much amount? 36 lakhs 72,000 divided by 1,80,000. How much you're getting? 20.4. So that means individual department recovery rate is 28.8 and 12 point. Whereas if I use only single overhead recovery rate, which is equal to 20.4. Right. Additional information. Each unit of product A requires 4 hours in department pi, 1 hour in department Q. That means let us assume for A, what is overhead cost? It should be, if I go with department, 4 into 28.8 plus 1 into 12. How much you're getting? 28.8 into 4 plus 12. 127.2, which is based on department. If I go with single overhead recovery rate, you should charge 20.4 per each hour. How many hours in department way? Either it could be pi hour, it could be Q hour. It is 5 hours into 20.4. So 120, 20.4 into 5, 102. Also, see here carefully. If I go with single overhead recovery rate, I would charge A 102. If I go with department rate, I would charge 127.2. It is overpricing. This is underpricing in case of unit A. Whereas each unit of product B requires 1 hour in department pi, 4 hours in department Q. That means if I go with single recovery rate, this is single overhead recovery rate, 5 into 20.4, 102 is common. Whereas if I go with each department wise for B, 1 hour in department pi, 1 hour in department pi, 1 into 20.28.8. In examination, they may confuse. Above they may give Q, below they may give pi. Please be careful. Please be cautious while in the examinations. Plus 4 into how much you are charging? 12 rupees. So 28.8 plus 48, 76.8. Now see carefully. When we discussed in activity based costing chapter also, the drawbacks, the fallbacks in traditional costing has emerged the need of activity based costing. So if I go with single over recovery rate, every product I'll charge 1 or 2, whether it is A or B. Whereas if I go real consumption, A I should charge 127.2, B I should charge 76.8. Now what we are doing when we are working with single over recovery rate, A is underpriced, B is overpriced. A is underpriced, B is what, overpriced. Because your pricing is dependent on your cost. When you say that 1 or 2 is my cost, you add margin on that. Understood? So let us assume for A cost, there could be some material cost, some labor cost, overheads you are adding 1 or 2 instead of 127.2. That means you are undercharging, underpricing. Whereas B, materials would be one cost, labor would be one cost. You need to add only 76.8, but you're adding 1 or 2. That means you're overcharging product B. Okay. This was the first year of the company's operation. There was no WAP at the end of the year. However, 1,800 and 5,400 units of product A and B were hand at the end of the year. Because ultimately, if it is sold, if it is produced and sold, it would have affected your costing P&L. There you would have worked out under absorption or over absorption. But in the closing stock, you may have this under absorption or over absorption that you need to eliminate. The budgeted activity has been attained by the company. That means you are able to produce these number of units. Determine the production and sales quantities of both products A and B for the above year. Now see your production quantity. How much your production quantity? 90,000 labor hours. And every time you are taking how many hours? 5 hours for each unit. Correct? How many hours? 5 hours for each unit. That means how much you would have produced? 90,000 divided by 5. You would have produced A 18,000 units. B also 18,000 units. How much units you would have sold? If you reduce the closing stock, you will get sales. What is the closing stock of A 1800, B 5400? Your sales would be 16,200 units here. Here 18,000 minus 5,400. How much amount? 12,600. Clear? So sales of A is 16,200. Sales of B is only 12,600. Production is same because you have attained the budget data. 90,000 hours. 90,000 hours. So you would have produced these many number of units. Okay. Because every unit you are taking, like for example, for X is the number of units of A produced. Y is the number of units of B produced. So ultimately, for department 5, for A, if we see A and B by Q, it is 4 hour, 1 hour. It is 1 hour, 4 hours, right? So we know this is equal to 90,000 hours. This is 90,000 hours. Let us assume 4A plus 1B should be equal to 90,000. 1A plus 4B 90,000. So if we calculate based on this, so you get A is somewhere about 18,000, B also 18,000. Clear? So instead of that also I said directly 18,000. Okay. Now, production sales quantities you have under. Production is 18,000, 18,000. Sales is 16,200, 12,600 units of B. Right. Ascertain the effect of using a predetermined overhead rate instead of department-wise overhead rate on the company's income due to its effect on the stock value. So obviously, I said for each unit you are charging more amount. Obviously, there will be some effect on the closing stock value. How much is the closing stock value of AMA 1800? How much is the closing stock value of B 5400? So how much you are charging for each unit extra, that we need to calculate here. Okay. In department pi, if you see, usually you should charge 28.8, but you are charging 20.4. How much you are charging extra? You are charging less. 28.8 minus 20.4. How much amount ma? 8.4 rupees. You are charging less. What about department Q? You should charge only 12. You are charging 20.4. That means you are charging extra 8.4. So this effect would be on the closing stock. Now, if it comes to A, how, A 1800 units, PQ. P, how many hours it is taking? 4 hours. Q, how many hours? 1 hour. What is the rate you are charging P in extra? 8.4. 8.4. So this you are charging more, right? So if I calculate here, 4 into 8.4 minus 8.4, 25.8 into 1800, 45,360. So 45,360, you are putting your valuation more. That means it is the effect on the closing stock value. Okay. So predetermined rate. So 45,360 for A. How much would be for B? Because it closing stock is more. 5,400. P 1 unit. Q 4 hours. So same 5,400 into same amount. 4 into 8.4 minus 8.4. So 25.2 into 5,400. So 1,36,080 rupees. So this is effect of the closing stock value. Okay. So B, what you are doing, you are keeping more amount of closing stock value. This profit would be increased because closing stock value is more. A, you are keeping less amount. So obviously that would affect your profit. So you are showing excess profit of 1,36,080 minus 45,360. How much amount? 90,720. You are showing more amount of profit. Inflation of profit. Third point. Calculate the difference in the selling price due to the use of predetermined overhead instead of using department-wise overhead rate. Assume the direct cost per unit of A and B were 25 and 40 respectively, and the selling price is fixed by adding 40% over and above these costs to cover profit and selling an administration overhead. It is simple. Like for example, if you are using what is your selling price if it is a predetermined rate? What is the selling price if you use based on the department recovery rate? We will be doing for A once, B we can do it later. What is the cost amount? Material cost at 25 and the department cost. For if you see in department A, if it is predetermined 5 into 20.4, 102, and you are adding cost of how much amount? 40% on 127 into 40% margin, 50.8. So 127 plus 50.8, 177.8 rupees. If it is under predetermined rate. If I use based on department recovery rate, material cost 25. In department pi, 4 hours into 28 point, how much am I? 28.8 Q 1 into 12 rupees. What is the over recovery rate? 4 into 28.8, which is 115.2 plus 12. What is the total cost of production? 152.2. For this, you are adding profit margin 40%. So total cost would be 213.08. So you're overpricing, so you're underpricing it because based on predetermined rate, 177.8 you should charge, but you're charging how much amount? 213.08. So 36.08. How much amount? 36.08 rupees you are underpricing your product A. 35.2 points. When it comes to product B, CA 40, same because it is predetermined rate 5 hours into 20.4 plus margin. If it is a based on the department recovery rate 40, 1 hour into 28.8, 4 hours into 12, 76.8. 40 plus 76.8, 116.8 into 140%, 40% margin, 100% cost, total sales price would be 163.52. Whereas you are charging how much amount? 198.5. You are overpricing the product. 198.5 minus 163.52. How much amount? 34.98 rupees. You are 35.28 is the overpriced. Okay. 198.5 you are getting, it is 5. So 1 So that amount you are getting as a, so product A, because of using predetermined rate, one you are underpricing, other one is what overpriced. So that is the reason that fallback, the drawbacks in traditional costing result into emerging of activity based costings. Clear? Right. Right. Let me go back to the, so we have covered 3 questions of RTP. So we will be moving next question on activity based costing. So in overhead chapter, please be focused on, calculation of that is primary distribution of words, secondary distribution of words, and different methods, and the calculation of mission hour rates. And the other important point is that how you underabsorb or overabsorb overheads. The other question would be like these questions where they be asking what is effect of single determined rate, what is effect of department recovery. Okay, right. Let me let us go to the question number 4. Very important chapter. Activity based costing. 10 marks is pakka from this chapter. Right. Let us go to question number 4. The profit margin. Please understand, Amma. I'm assuming that you have read all the chapters and using this RTP as a revision. Okay. Right, Amma. The profit margin of baby hair clips company, and I request if you are very comfortable, if you have learned the new things in our classes, please do a feedback on the Play Store or on the Telegram groups, right? The profit margin of baby hair clips company were over 20% of sales producing brown and black hair clips. The profit margin of baby hair clips company were over 20% of sales producing brown and black hair clips. So that is 20% margin. During the last year, green hair clips had been introduced, had 10% premium in selling price. After the introduction of yellow hair clips earlier 5 years back at 10 by 3% premium. However, the manager of the company is disheartened with the sales figure for the current financial year as follows. Because if you see the yellow, sales is 27 lakh 90,000, green is only 3.3 lakhs. Okay. Material cost, I don't know why it is. Now, what is your material cost? Material cost is given, direct labor is given, overheads is 3 times of direct labor. See, this is what is related to earlier question also. I am not considering what is real consumption based. I'm just going by a predetermined rate, which says that if 20 lakhs is my direct labor, if 20 lakhs is my direct labor, 60 lakhs would be my overhead cost. If 16 lakhs is my direct labor, 48 lakhs would be overheads. If 3.6 is my direct labor, 10.8 lakhs would be overheads. So that is means 40 lakhs is my direct labor. I'm assuming my overheads should be 1.2 crores. So you got income of 13.5 lakhs. Okay. Right. It is known fact that customers are ready to pay premium amount for yellow and green hair clips for their attractiveness. And the percentage returns are also high on the new products. At present, all of the plant's indirect expense are allocated to the three products to the products at a 3 times of the direct labor expense. So 3 times. Okay. However, the manager is interested in allocating indirect expense on the basis of activity cost to reveal real earner. I said an example on Paradise example about biryanis. People who has consumed more paid less, consume less paid more. If I go with actual resource consumption based, I would be charging the exact amount how much they are using. He provides support expense. I'm repeating that this is a very beautiful question and activity based costing. Don't leave anything, including value added, non value added, and the combination of standard costing with the combination of standard costing with activity based costing. So ABC with 1 minute. So ABC with standard costing, ABC with marginal costing. Please be very important. Okay. He provides support expense for as follows. Indirect labor 40 lakhs. So what I'm doing, I'm going with a concept of 3 times, which is I'm getting 1.2 crores. What I assume 40 lakhs your direct labor, 1.2 crores is our support expense. You are assuming three times. Indirect labor 40 lakhs, labor incentives 32 lakhs, computer systems 20 lakhs, sorry, machinery depreciation 16 lakhs, machine maintenance 8 lakhs, energy for machinery 4 lakhs. We put pen option there. Right. So how much amount? 1.2 crores. So what is total cost? 1.2 crores. I'm assuming three times. That is what I'm happening. If I go with each point, how they are using, then I'll understand what is the real consumption. Okay. He provides the following additional information for accomplishment of his interest. Incentives to be allocated at 40% of the labor expense, both direct or indirect. So incentives at 40% of labor expense. What is the total labor expense? 40 lakhs plus incentives of. So I think PDF is giving me trouble today. So 40 lakhs plus. So 40 lakhs plus 40%. So which is equal to 16 lakhs. So 56 lakhs it is based on the incentives. Okay. So your incentives of out of this 32 lakhs, 40% of labor expense you need to allocate it. Indirect labor are involved mainly in three activities. About half of indirect labor is involved in handling production runs. So half of indirect labor, how much amount? 40 lakhs into 50%. So 20 lakhs is involved in indirect labor. Okay. Right. Next one. Another 40% is required just for the physical changeover from one color hair clip to another, because yellow hair clips require substantial labor for preparing the mission as compared to other color hair clips. Remaining 10% of the time is spent for maintaining records of the products in four parts. So one is changeover, that is based on setups. So 50% is directly involved in production runs, 40% is in terms of setups, 10% is for maintaining. Okay. Next one. Another amount spent on computer system 20 lakhs is for maintenance of documents relating to production runs and record keeping of the four products. In aggregate, approximately 80% of the amount is involved in the production run activity. 80% on the production run activity. That means based on production runs, 20% is used to keep records of the products in four parts. That is based on number of parts. Other overhead expense, that is machinery depreciation, mission maintenance, and energy for machinery, are incurred to supply mission capacity to produce all the hair clips. That is a practical capability of 20,000 hours. Activity cost drivers is given. Sales is given. Selling price, material cost, mission hours per unit is given. How many production runs is also given. Setup time per run. Okay. So number of production runs into number of setup time. You'll get total number of setup time. How many setup time? If you see 100 into 4, 400 plus 100 plus 76 into 6, 456 plus 94 into 4, 96. So 1052 hours. How many? 1052. Calculate the operating income and operating income as percentage of sales using activity-based costing system. State the reasons for different operating income and traditional income and activity-based costing system. Let us do it. Come to question number 4. Now, what is our formula? First, we need to work out the cost driver rate. Activity, total activity cost. What is allocation? So activity base. So activity driver rate. First one is about indirect labor. What is indirect labor cost? Indirect labor, it says 40 lakhs plus 40% of the incentives, right? So how much is indirect labor? 40 lakhs plus 40%, which is equal to 56 lakhs. Now, what is allocation? Allocation is based on the number of production runs. 50% is for based on production runs. 40% is based on setup time. Remaining is based on maintenance, correct? Based on number of parts. Maintaining records for the products in 4 parts. Okay. Now, so overhead cost is 28 lakhs. So how many production runs we have? If you see the production runs, 100 plus 100 plus 76 plus 24, 300 production runs. I worked out based on number of setup hours, 1052. How many parts we have? 4 parts. So you are getting cost driver at 9,333, 21.21.8, 1,40,000. That is for indirect labor. Computer systems, what is the computer system cost? 20 lakhs. That is for 80% is based on production runs. So 300 production runs. Remaining 20% is based on number of parts. So 20 lakhs and 20%, 4 lakhs. Number of parts, 1 lakh. Machinery depreciation, all these three is based on number of machine hours. 80, 40, and 20 are getting the cost driver rate. Activity based costing. How much is the sales for each unit amount? 10,000. How many units? 1 lakh units, 80,000, 18,000, 2,000. You know sales value. Material cost is also known. Direct labor cost, out of that 40% went to where? Indirect labor incentives. So out of the total 20 lakhs is the cost of Brown, correct? Out of this 40% remove it because direct cost is only 60% of direct labor cost. So 20 lakhs out of this 40% you are moved to indirect labor. Remaining you are keeping only 40%. Correct? So indirect labor 40%. So 50%, 40% indirect labor here, remaining incentives here. Correct? How much is incentive percentage said? Incentives to be allocated 40% of the labor expense, both on direct and both on indirect. So on direct 40%, on indirect 40%. Indirect 40%, sorry, Amma, please understand, 20 lakhs is separate, again incentives. Indirect labor is separate plus incentives. But direct labor incentives produced directly. Indirect labor incentives added as a part of activity cost driver rate. Okay, that is what you got 28 lakhs here. Okay. Now, indirectly, this is all over. Next, computer systems, 80% based on production runs, 20% based on number of parts. Number of parts means each individually one. Based on production runs, you know how many production runs? How many production runs we have? 100, 100, 76, 24. 100, 76, 24. 20% based on parts. Next one. Machinery depreciation, mission maintenance, and energy for machinery. All these based on number of hours. Total how many hours we have? 20,000 mission hours. Correct? How many mission hours we have? 20,000 mission hours. So based on this 20,000 mission hours, so you would be allocating the remaining three indirect cost. Clear? So you're getting operating income as a percentage of sales. So you're 21.61, 22.61, 44, and 200. Generally, what is your understanding that you are getting more amount of margin for, you are assuming more amount of margin for yellow and green because it is not based on individual product. Wise, we are going on a predetermined rate. But when you work out individually based on resource consumption, see here, these two products are in terms of losses, and these two are the real products. The profit of these two products are being taken away by these two products. Okay. Ultimately, please understand three important points in activity-based costing. The total cost under both the methods is same. The total overheads under both the methods is same. Total profits under both the methods is same. The only difference is individual profit and individual overheads. What is second point they ask in activity-based costing? This is about the important point is that information is given. The only thing you need to work out is on incentives. So please be focused on that part. Okay. State the reasons for different operating income and traditional income statement in activity-based costing. Simple. Activity-based costing is based on resource consumption. Traditional costing is based on single overhead rate. So the activity-based costing is to be more appropriate. You have a different level of activities, right? So when we have batch level and product level activities, there are four: unit level, batch level, product level, and facility level. If the activities are more under batch level and product level, you should move to what? ABC. If the batch level and product level activities are low and unit level and facility level activities are, sorry, batch level and product level activities are less and unit level and facility level activities are more, then please be go with the traditional costing because you will not find much difference. Understood? So that is the reason ABC costing is simple one. You have very beautiful questions where they are given overheads under traditional costing. They would not giving the overheads under activity based costing. But please understand, overheads under both the methods is same. Total overheads under both the methods is same. One is what is only difference is on account of individual overheads. Ultimately, if it is 1.04 crores here, there is also 1.04 crores. If it is there, profit is same. Here also same amount of profit. So okay, so that means you get same amount of margin. In traditional costing, how much margin you got in overall? 13.5. How much I got here also? 13.5. And what about the profit? The total operating profit, how much amount? 40.74 lakhs. How much here also? 40.74 lakhs. So did you find any deviation there? No. The only deviation is that incentives they are given separately, which is 32 lakhs, that I have apportioned directly 50%, indirect 50%. So, so that is how you got, because 16 lakhs you are giving to, because it is simply 40 percentage of the labor expense, either on direct or indirect. So total put together 32 lakhs. Okay. So that means out of total overheads, if you see the question, so even if a small change, don't get confused. The concept remains the same. You be focused on the concept itself. 40, I know. This 32 part went to because the total direct cost is 40 lakhs, indirect labor is 40 lakhs. Correct? What did they say? Incentives, you need to allocate 40% of the labor expense. On 40 lakhs, 40%, 16 lakhs. On indirect labor, 40 lakhs, 16 lakhs. So total book together, 32 lakhs. So out of this 32, which is direct, it has went to prime cost. Remaining added to indirect labor. That is what we have apportioned: 50%, 40%, and 10%. Computer systems, we have considered machinery depreciation, machinery maintenance, energy for machinery is based on labor hours. Clear? So this is the important question and very beautiful questions. Whatever we are doing from last four questions, except three we have known familiar. 1, 2, and 4, and 3 also. Very beautiful questions. So please understand that you need to revise these topics. In the examination, if a new thing comes, don't get confused. It is the concept you already learned. We need to be focused on that. Okay, right. So let us go to the remaining questions, Amma. Next question is about question number 5, which is from cost sheet. As we have discussed in while revising the chapter itself, there would be normally a question from cost sheet. It can be for 5 marks or it can be for 10 marks. So please do not neglect the cost sheet chapter. The reason is that simple chapter, marks oriented chapter. Let us come to question number 5. CT Limited is engaged in producing medical equipment. It has furnished the following details relating to its products producing during a month. They are given raw materials, opening stock 1000 units, which cost 90 lakhs, purchase, closing stock 1 crore 57 lakh 50,000. The opening WIP and closing WIP. Finished goods, they are not given. Inventories includes raw material, WIP, and finished goods. Direct employees' wages, allowances, etc. You know, in terms of cost sheet, first it's about direct raw material consumed, opening stock plus purchase minus closing stock. Direct employees cost 6 crores 88 lakh 50,000. Primary packaging cost is form part of what? It is a form part of cost of production. Secondary packing is part of cost of sales. Primary packing is part of cost of production. Please understand this. R&D expenses, quality control expenses, it will be taken as a part of cost of production. Consumable stores and depreciation to plant, which is a part of factory overheads. So this is factory overheads. Take a simple pen. Administration overheads related to production is also a form part of cost of production. That is after factory cost, you'll get this number. Selling expenses as part of cost of sales. Royalty paid for production. This is very important, which is called the direct expenses, which is a part of what? Direct expenses. I think direct expenses. So royalty paid for production is a direct expense. Please be very careful. Cost of website for maintenance. This is for sale. It's a part of selling and distribution expenses. Secondary packaging cost is form part of what? It is a form part of selling and distribution overheads. There was a normal scrap of 2 units of direct material, which realized 5,400 per unit. The entire finished product was sold at a profit margin of 20% on the sales. So simply from the raw material cost, wait, I'll have some problem with pen. So from direct material cost, so we'll reduce this normal loss. So the realizable value of normal loss will be reduced from the raw material consumed. And entire finished product was sold at a profit margin of 20% on sale. That is, there is no opening stock and closing stock. Everything is sold. So from cost of sales, we'll put 20%. So you'll get the sales value. You are required to prepare a cost sheet showing prime cost, gross works cost, factory cost, costs of production, profit, and sales. Now, for example, when it comes to prime cost, what will be covered in prime customer? Direct raw material consumed. From this direct material, raw material consumed, we'll be reducing the normal loss of the realizable value of scrap. So that would be the materials consumed. So 90 lakhs plus 44 crores 10 lakhs minus 1 crore 57 lakh 50,000. From that, you will be reducing the normal scrap value. How many units amount? 250 units into each unit. How much amount? 5,400 units. So 250 into 5,400. So, so if you go to solution, so it's simple question. I'll be explaining from the solution itself. Question number 5. So materials 90 lakhs plus purchase and closing stock. So normal wastage value we have reduced, then you'll get the material consumed. For this, you add direct cost, direct labor cost, plus direct expenses, which is royalty paid for production is a part of direct expense. You'll be arriving at the prime cost. For prime cost, what we need to add? Factory overheads. You'll get gross factory cost. Then you adjust opening stock of WAP, closing stock of WAP. Then you'll get the net factory cost. For that, you'll be adding to administration overheads related to production and R&D and quality control cost. This all known. For that, you'll be adding the primary packaging cost. How much primary packaging cost? 1,440 into. So how much amount? 7 crores 5 lakh 60,000. So you are arriving at the cost of production. Then for that, you'll be arriving the selling expense and the cost of maintaining the website. That is also part of selling and distribution audits. Then you will be adding the secondary packaging cost. So secondary packaging cost, how much they are given? 225 rupees per unit. How many units more? 49,000 units. So this would be the cost of sales. For this cost of sales, you'll be adding how much amount? How much did they say in the question? I think it is 20 percentage on the 20 percentage on sale. If it is 20% on sale, how much it would be on cost? Let us assume sale is 100. No, no, wait. 20% on sale means so 80 rupees. Okay. Now, if you see 20% on sale means how much it would be on cost? 20 by 80 into 100. It is 25% on the cost. 20% on sale is nothing but then 25% on the cost. So 76 crores 91 lakh 50,800 into 125%. So you are getting sales value of 96 crores 14 lakh 38,500. So this is your sales value. I think it is a simple cost sheet. So what is important things to be remembered in this question is first one, direct expenses you need to identify. Reducing the normal loss, you need to be very careful from the raw material consumed. Then on cost of website for online sale. If it is for online sale, it is a selling and distribution rates. If it is related production, it is as a part of production cost of production. Primary packaging is part of cost of production. Secondary packing is part of cost of sales. Clear? Right. So let us go to question number 6, which is about cost accounting system. And what is the question they ask you? They ask you to prepare statement as per financial accounts and profit as per costing records. So financial accounts means that what we have learned from MAZ, your trading and profit and loss account. Profit as per costing records is nothing but then as per our cost sheet. Then we need to do the reconciliation. What are the areas of reconciliation we have discussed in detail in our classes? There are some items which are considered in financial accounts but not in cost accounts, like what we have, like dividends paid, interest paid, goodwill written off, etc. There are some items which are considered only in cost accounts but not in the financial accounts, like opportunity cost, etc. So when we prepare two financial statements, one is as per financial accounts, one is as per costing records, and you can find out what is the areas of reconciliation. One major area of reconciliation is under absorption or over absorption of overheads, that too only to factory overheads. So you should be very careful with that. Okay. So let us read the question. The financial books of a company reveal the following data for the financial year ending 31st March 2022. Opening stock is given. Opening stock 875 units. Finished goods 1,48,750. WAP 64,000. If it is a financial accounts, we would have done like this: opening stock 1,48,750. WAP, how much amount? 64,000. And this is all about the raw materials consumed. Raw materials consumed 15,60,000. This is a part of debit. So raw material consumed 15,60,000. I think direct labor 9 lakhs. Factory overheads 6 lakhs. Goodwill written off, it will be taken in financial accounts. Administration overheads, dividend paid, bad debt, selling and distribution, interest received credit side, rent received credit side, sales 41 lakh 60,000. Closing stock of finished goods, how much? 82,500. WIP 77,334. So we can simply work out what is the profit as per financial accounts simply. So whatever is on the debit side, opening stocks and expense will be taken on debit sides. Sales, closing stock, and other income will be taken on the credit side. Then we can work out what is the profit as per financial accounts. Now, can we work out, if possible, can we work out that? Now, see what are on credit side, 41 lakh 60,000 on the credit side, and closing stock is on credit side, rent received is on credit side, interest received is on the credit side. Okay. So remaining closing stock of WIP is on the credit side. So these all are on the credit side. So these all are on the debit side. Now, can we work out credit minus debit? Yes. Selling and distribution. What? How much amount of sales? 41 lakh 60,000. 82,500 plus 77,334. Rent received 36,000. I'm doing directly 90,000. So on credit side, you have 44 lakh 45,834. Hope you're doing along with me. Less opening stock 148 750 minus 64,000 minus 15 lakh 60,000 minus 9 lakhs minus 6 lakhs minus 2 lakh plus 5 lakh 90 7 lakh 90,000 minus 1 lakh 70,000 minus 24,000 minus 1 lakh 22,000. So you are getting a financial profit of 67,084. How much you're getting? 67,084. Can we check whether this is correct or not? Yes. Let us go to the solution part of financial accounts. Question number 6. So see how much you got? 67,084. This is as per financial accounts. Let us understand what is there with respect to cost records. Let us read one by one. So opening stock WAP will be there. So factory overheads are absorbed at 60% of direct wages. So factory overheads are absorbed at 60% of the direct wages. How much is your direct labor? 9 lakhs. So factory rates at 60% means 9 lakhs into 60%. How much amount? 5 lakh 40,000. 5 lakh 40,000. Okay. Whereas how much you have spent? How much you have spent? Actually, it is 6 lakhs. So then you'll get under absorption or over absorption of overheads. Correct? So how much You have spent 6 lakhs, but you have absorbed only 5 lakh 40,000. So 60,000 is a reason of under recovery. Okay. Now, administration overheads are recorded 20% of the factory cost. So what we will do, raw material consumed plus direct wages plus direct expense put together prime cost. For that, if you add factory overheads, you will get the factory cost. Administration overheads you will take directly at 20%. How much you have incurred? 5 lakh 90, but you are taking recovering only 20% on the factory cost. So balance would be either under recovery or over recovery. That is one reason of variance. So factory overheads is one reason of reconciliation. Administration overheads is another reason of reconciliation. And selling and distribution overheads are charged at 8 rupees per unit sold. How many units have sold? 14,500 units. 14,500 into 8. How much amount? 1,16,000. Whereas how much you have spent? You have spent 1,22,000. So again, there is something called under recovery of selling and distribution. So that we need to work it out. Okay. Opening stock of finished goods is valued at 208 per unit. Whereas in financial accounts, you have valued 875 units at 1,48,750. 1,48,750 divided by 875. How much? 170. Here you are saying 208. That is one reason of variation. The company values work in progresses at factory cost for both financial and cost profit recording. So both would be we need to work it out. Prepare a statement for the year ended 31st March 22 showing the profit as per financial accounts, which we already did. We got somewhere about 67,000 odd, right? 67,084. Yes, 67,084. And we need to work out as per cost accounts and do the reconciliation. So let us go with the reconciliation part. Let us go to the cost accounting profit. So once cost accounting profit is over, then we can go for the reconciliation. Okay. Hope you are understanding, right, students? Let us go to the number of units produced we have worked out. So sales is 14,500. We have added closing stock, reduced opening stock for calculation of production. Opening stock plus production minus closing stock is equal to sale. We have worked out the reverse way to get the production. Let us work out the cost sheet. How much is the raw material consumed? Raw material consumed. How much is raw material consumed, Amma? So raw material consumed is 15,60,000. For this, you will add direct labor. You will be arriving at factory cost, prime cost. So factory rates are how much? 60% of direct wages. So 9 lakhs into 60%, 5,40,000. Okay. Then you are arriving the factory cost, and administration rates are recorded based on how much? 20% of factory cost. 20% of factory cost means, so 29 lakh 60. You have given opening stock working progress effect, closing WAP. So you have got factory cost, net factory cost on this 20%. You have arrived at the administration overheads. Then you have arrived at the cost of production. Okay. Now, based on this, we are going with the reconciliation part. What are the areas of reconciliation? Opening stock valuation, one difference, closing stock valuation, and we have factory deviation, administration deviation, selling and distribution deviation. Okay. Now, what is the profit we got? See carefully. Profit as per cost account. Sales revenue is common under both the methods. Okay. Opening stock. You're valuing opening stock at 208 rupees. So cost of production we have worked out from our working note. Then closing stock is based on this factor. So 35,84,000 is for production of 14,000 units. The closing stock units of 375. So production cost of goods sold you have added selling and distribution overheads, you got the profit as per cost accounts. So we need to do the reconciliation between the financial accounts as well as the cost accounts. What is the profit of financial accounts? 67,084. What is the profit as per cost accounts? It is about 3,74,000. Guys, what we need to do, we need to do the reconciliation between these two items. You can keep the financial accounts profit one side, cost accounts statement one side. Item by item, we can go and do the reconciliation. Now we are starting with cost accounts. So what is our profit as per cost accounts? 3,74,000. Okay. There are some items which are considered only in financial accounts, but not in cost accounts, which are on the credit side of financial accounts. What are on the credit side of financial accounts? Interest received, rent received. That means because of this, financial accounts profit got increased. So my cost accounts profit also I'm increasing. There are some debits only in financial accounts, but not in cost accounts. Because of that, financial accounts profit has come down. What are those items, Amma? Goodwill written off, dividends, bad debts. So these three I should have reduced from my cost account profit. So this is these two, this is these three. Hope you have understood up to here. Now come to under absorption or absorption of each item. Admin overheads. How much I absorbed admin overheads, Amma? As for I have absorbed 5,97,333, whereas I have spent how much amount of my admin overheads? I spent 5,90,000. That means there is over absorption. Because of over absorption, your cost accounting profit has come down. So I'm increasing my profit to the extent of over absorption, 7,333. Now, when it comes to leave about opening stock later. So admin overheads is also covered. Now come to factory overheads. How much is the factory overheads you have incurred 6 lakhs. Whereas you have observed only in your cost accounts how much amount? 5 lakh 40. That means you have debited in your cost accounts only for how much amount? 5 lakh 40. So that means you have debited 60,000 less. Because of that, your cost accounting profit would have gone more. So reduce that extent of 6 lakhs minus 5 lakh 40. How much amount? 60,000. Selling and distribution overheads similarly. How much is the selling and distribution overheads you have incurred? In your financial accounts, it got debited with 1 lakh 22, whereas in cost account, it got debited only with 1 lakh 16. Because of that, your cost accounting profit has gone up. So to that extent, reduce. To that extent, reduce. So whatever is under absorbed, I'm adding to my cost accounts profit. So it is simple like BRSM. What happened in financial accounts? What happened in cost accounts? If you understand both simultaneously, you can understand whether to be added or whether to be reduced. So because of debiting more in financial accounts, your cost accounting profit has gone up. So that reduced to come with the financial accounts profit, to align with the financial accounts profit. Clear? Right. So up to now, hope you are clear. Now let us come to opening stock and closing stock. Opening stock in financial accounts, you have valued at which value? You have valued at 1,48,750. Whereas in cost accounts, you have valued at how much value opening stock? 1,82,000. So that means where it is more, that means in financial accounts, the opening stock value is less. In cost accounts, opening stock value is more. So opening stock will decrease your profit or will increase your profit? It would have decreased your profit because you are debited more amount on the debit side of cost accounts. So to that extent, I'm increasing back 33,250. Now, when it comes to closing stock, how much you have valued closing stock in financial accounts? Closing stock of finished goods is 82,500. Whereas in cost accounts, you have valued your closing stock at 96,000. You have valued your value at how much amount? 96,000. That means having more amount on the closing stock, that means it would have increased your cost accounting profit. To align with financial accounts, I should reduce my profit. So 96,000 minus 82,500. So reconciliation is very simple, Amma. Sir, what happened in both the accounts? What happened in it? So what I have written, for example, what is debited here? What is debited here? You can understand. Sir, if more amount is debited on the financial accounts or more amount is debited on the cost accounts. And ultimately, the base is important. Sir, I have started my reconciliation taking as the base of cost accounts. Now, let us assume, take a simple example. Don't get confused, Amma. Sir, I should debit my cost accounts with 2 lakhs, but I have debited with 2 lakh 20,000. That means you got debited more, right? To align with that means I should reduce my debit amount. That means, so instead of debiting 2 lakhs, if you have debited 2 lakh 20,000, your amount would have been same. Like for example, in financial accounts, your opening stock value is how much amount, Amma? In financial accounts, your opening stock value is how much? In financial accounts, your opening stock value is 1,48,750. That means your financial accounts got debited with 1,48,750. Your cost accounts got debited with how much amount? 1,82,000. How much amount? 1,82,000. Now tell me, opening stock will decrease your profit or increase your profit? More amount of opening stock is on costing accounts. That means cost accounts profit got decreased or not. Now I want to align with my financial accounts. That means I should increase my profit to the extent of excess debit. That is what we did for 33,050. So simple, you need to prepare financial accounts as how you do with the trading and profit and loss account. You prepare your cost sheet as per the cost sheet. Then you do the reconciliation. The reconciliations will happen because of undervaluation or overvaluation of opening stock and closing stock. And second thing, WAP, there is no worry because as per financial accounts, as per cost accounts, WAP is same. So it is no worry. Next, under absorption or over absorption of overheads. Either it could be factory, administration, or selling and distribution overheads. Because in financial accounts, we take exact amount. In cost accounts, we go by an absorption basis. That would be the reasons of variation. And there are some items which are taken only in financial accounts, but not in cost accounts. In the financial accounts, if it is taken as an income, like interest received and rent received, if the same amount is taken in cost accounts, my profit would have gone more. That is the reason I've added. There are some accounts which we have taken only in financial accounts on the debit side, but not on the cost accounts, like goodwill written off, bad debts, etc. Okay, that we have reduced from my cost account. So it is simply, if you do like a BRS, it would be easy. In the examination, if they have started with loss as per cost accounts, like how we do with OD with the cash book statement or OD with the bank book. So that way of thinking would be changed. We have given multiple questions in our material, Amma. Please do once again. So because this is the area where they can give in the examination. Okay, right. Let us go to the next question. Hope you have understood up to question number 6, right? Let us go to batch costing. It is also a simple question. I think we used to use a draw PDF. I don't know, it is giving me problem today, but don't worry. So I think if you are our student, we have watched the regular classes, we would have, we would have discussed lengthy in the respective chapter summer. So if not possible, you can take a 1 month subscription, do the tough questions, tough chapters that would literally benefit you. Okay. Now let us come to question number 7. PS Limited, right, students? Let us go to question number 7. It is from the batch costing. So from batch costing, the question could be either to calculate economic batch quantity or to prepare the selling price for batch numbers. So this question number 7, we have got to calculate the selling price per unit of batch number. So PS Limited manufactures articles in predetermined lots simultaneously. So lot wise, the following costs have been incurred for batch number 143 in the month of March 2022. Units produced 1000 units. Direct material cost 2 lakhs. Direct labor, we have two departments. Department A, 800 labor hours at 100 per hour. Department B, 1400 labor hours at 120 per hour. So two departments. Factories are observed on labor hour basis and the rates are Department A 140 per hour, Department B 80 per hour. So you know it is 800 hours into 140 and 1400 hours into 80 per hour. Administration overheads are absorbed at 10 percentage of the selling price. Okay, at 10 percentage of the selling price. Okay, be careful. The firm expects 25% gross profit, that sales value minus factory cost, for determining the selling price. So you are required to calculate the selling price per unit of batch number PS 143. Now, if we come to direct material cost, how much amount? 2 lakhs. Direct labor, Department A, 800 into 100, 80,000. 1400 into 120, 1,68,000. So put together 2,48,000. So 2 lakhs. Factories are absorbed on labor hour basis and the rates are Department A 140 per hour, Department B 80 per hour. So 800 labor hours into 140, 1400 labor hours into 80. So that is would be the factory overheads, right? So you will be arriving at the factory cost. How much am 1800, 800 into 140, which is 1,12,000. 1400 into 80, that is also 1,12,000. So how much you'll get factory cost? Plus 2 lakhs. So you'll be getting 6,72,000. I think my pen got some 6,72,000, right? I think it is better we write in the. So we have got 6 lakhs factory cost. Six lakh 72,000, right? Now, what did they ask you, Ma? What did they say about admin overheads? Admin overheads. How much is admin overheads? 10 percentage of the selling price. How much amount? 10 percentage of the selling price. And what is the next thing they said? 25% gross profit you are expecting. That means if selling price is 100, 10% you are leaving it for admin overheads. 25%, 15% you are leaving it for. So from gross profit should be 25%. Out of this 25%, 10% for admin overheads, 15% would be for profit. Correct? Because from gross profit, you should reduce admin overheads. We don't have any selling and distribution. Reduce profit, you should get the ultimate profit, ultimate selling price, right? Now, if 6,72,000, which is equal to 75%, how much would be sales value? 6,72,000 divided by 75 into 100, 8,96,000. Now, if you see admin overheads, 10% of selling price, 89,600. Add profit. How much amount? 15% on selling price. So selling price per batch, 8,96,000. And how many units we have sold, Amma? What is the sold? How many units you have sold? We have produced and sold 1000 units. How much amount? 896. Correct? So this is what 896 rupees for each batch. So this is there in the same question. Answer is also same. So you can also verify with the answer. Right. Now let us go to the. So if we come to the solution part, which is of question number 7. So we got these amounts. Okay. So 896. They are also given alternatively if 25% is selling price, X minus factory cost divided by X. So anyways, it is better. Assume gross profit 25%. Gross profit to sales. What would be there, Amma? It will be admin overheads and profit. So 10% for admin overheads, 15% for profit. Find out the selling price per unit. Okay. Right. Let us move to question number 8 is about contract costing. A contractor prepares his accounts for the year ending 31st March year. He commenced a contract on 1st July 2021. Very important about the date. The following information relates to the contract as on 31st March 2022. Materials issued 12,55,000. Wages 28,28,000. So how many months? From 1st July to 31st March, first it should be about 9 months. Salary to foreman 4,06,500. Emission costing 13 lakhs has been on the site for 4.8 months. Very important. Its working life is estimated to be 70 years and its final scrap value is 75,000. So we need to calculate the depreciation 13 lakhs minus 75,000 divided by 12 months into 4.8. You will get the depreciation amount. How much you will arrive? 13 lakhs minus 75,000 divided by 12 months. And this year you have used it for 4.8. So you are getting how much amount? Divided by 7 years. You are getting 70,000. Depreciation 70,000. A supervisor who is paid 40,000 per month has devoted one half of his time to this contract. That means 20,000 rupees you need to debit for how many months? 9 months. 20 into 9, 1,80,000. That is a supervisor salary. All other expense administration charges amounted to 6,82,500. So you have materials issued. So what is the materials issued amount? 12,55,000. Wages 28,28,000. Foreman salary, depreciation, and because mission 13,000 you can put it here, and credit side you can put the closing balance, or you can debit 70,000 directly. Supervisor 20,000 into 9 months 1,80,000. All other expenses administration charges amounted to 6,82,500. Materials in hand side and credit side 1,77,000. The contract price is for how much amount? 1 crore. On 31st March 2022, 2/3 of the contract was completed. The architect issued certificate covering 50% of contract price and the contractor had been paid 37,50,000 on account. How much cash received is not required. Now tell me, what is a two-third of contract? 1 crore into two-third of contract. See how much amount you have spent. You draw the contract account. So, so materials, and so ultimately how much work cost amount? 52,45,000. Out of this, work certified is 50% of the total contract price. 1 crore into 50%. How much amount? 50 lakhs. Okay. And work certified is including profit. Work uncertified is about without profit. Okay. Now 52,45,000 is covering how much amount? Two-third of the contract. What if 100% is completed? Instead of 2 by 3, we'll go with 3 by 2 into 3 by 2. How much amount? So 78 lakh 67,500. 100% of the contract. 50% of the contract has been certified. So that 78 lakh 67,500 into 50%. How much amount? 39 lakh 33,750. How much profit you have recognized? 39 lakh 33,750 and 50% of the work certified minus 50 lakhs. How much you're getting? 10 lakh 66,250 is a profit. So balance would be the cost of work uncertified. So cost of work uncertified is, what is the total cost of work? Worked out 78 lakh 67,500. Out of this, or you can do in similar way. Notional profit is nothing but then value of work certified minus cost of work certified. What is your cost of work certified? Sir, 52 lakh 45,000 is for two-third. What is if it is 100% completed? 52 lakh 45,000 divided by 2 into 3. That means to complete the contract, your estimation cost is 78 lakh 67,500. Out of this, 50% is work certified. How much is work certified? 50%, 39 lakh 33,000. You can recognize the profit only in work certified. What is the value of work certified? 50 lakhs. Cost of work certified? 39 lakh 33,750. And balance would be the notional profit. And cost of work uncertified would be the balancing figure. Clear? So this same question we have in our material 2. Okay, please revise it. Let us go to the question number 9. Process costing. Okay. Right. Let us go to question number 9. It is also basic question number. Not worried. It is only about the normal losses we have. We'll try to understand. SM Private Limited manufactures their products in 3 consecutive processes. Hope you're understanding, and please understand, if you are already listened to these classes, listen to our classes, you would have seen all these questions in our material also, or you can able to understand what I'm going to relate. Okay. SM Private Limited manufactures their products in 3 consecutive processes. The details are as follows. Process A transferred to next process. From process A to process B, 60% will be transferred, and transferred to warehouse for sale 40%. Whatever we received from process A, 50% will be transferred to process C, and remaining 50% to be processed for sale. And whereas in process A, there is no further process, everything is sold. In each process, there is a weight loss of 2% and scrap of 8% of input in each process. So now 2% weight loss, scrap 8%. The realizable value of scrap of each process is as follows. Process A 2 rupees, process B 4, process C 6 per. So scrap, what we will do, we will reduce it from the credit side of the cost. The following particulars related to April 22. Materials used in ton 1000, rate per ton 20. How much amount? 1000 into 20, 20,000 on the debit side. Direct wages 4,000, direct expense 3,160. So what is the total cost? 20,000 plus 4,000 plus 3,160. 27,160. How much is weight loss? 2% weight loss. Normal loss 0. That means out of 1,000 tons, 20 went for normal loss. 8% of into scrap. For scrap only realizable value. 80 units into 2, 160. Now, how much we have transferred to process B? 40%. How much we have transferred to, sorry, 60%. How much we have transferred to warehouse? 40%. Now tell me how many, what is the total cost? Debit side 27,160. Credit side how much amount? 160 amount. So 27,000 is the next cost for how many units? Out of 1,000 tons introduced, 20 went for normal loss, 80% for scrap. Ultimately, how many units left, Amma? 900 units left. So 27,000 divided by 900, 30 rupees for each unit. 30 into, out of the 60% will go to process B, 40% will go to warehouse. Okay. So 30 into how many units, Amma? 900 into 60%, 540. So 540 into 30, 16,200. Correct? I will show you the answer. See, 30 rupees. So now tell me how much amount? 540 units and 360 units. So whatever the transfer from process A is the input to process B, 16,200. And that too. And next, do you have any separate input in process B? Again, your materials use 260 tons into 15. So new input 260 into 15, that 3,900. Again, you have direct wages and direct expense. You will reduce weight loss and you will find out the loss. So you'll get 35 rupees per ton. Similarly to process C and warehouse. Similarly, you'll work out process C account. How much you got from warehouse B? 12,600 and newly introduced 140 into 10, 1,400. So total 500 tons summa. So weight loss and scrap balance would be transferred to warehouse. It's a simple account, not much of difficult. Okay, right. This, if you see, we do in the first or second question in contract costing, sorry, in process costing, right? Now then they ask about FIFO, LIFO, weighted average, okay, inter-process profits. But be focused, weighted average and inter-process profits is a question which you can get in the examination. Please be focused on that also. Let me go to 10. Joint products and byproducts. One of the beautiful question, beautiful chapter. JP Limited uses joint production process. This question is a general question, not much complicated. JP Limited uses joint production process that produces 3 products at the split-off point. Joint production cost during the month of July 22 were 33,60,000. Okay, so at split-off point, 3 products, 33,60,000. Product information for the month of July is given. How many units of A produced? 3,000, B 6,000, C 9,000. Product A, sales value at the split of 200. After further processing, can sell at 300. Cost after split, further processing cost 6 lakhs, 6 lakhs, 6 lakhs. So product A can be sold at split off point, can be sold after further processing. See the incremental profit. Should I sell at the split off point or should I go with further processing? Because option is there only for A. For B and C, you don't have option to sell at split off point. Now tell me, what is the incremental revenue of selling A after doing further processing? 300 minus 200, how many units? 100 rupees. Into how many units? 3,000 units. 3,000 into 100, how much you'll get? 3 lakhs. But how much you should spend? 6 lakhs. Is it viable? Sir, to get 6 lakhs, sorry, to get 3 lakhs, can I spend 6 lakhs? No, that means you will be selling the units of A, whether at profit or loss. Sir, at split off point, you are getting loss. Don't worry. If you sell after further processing, you'll get your loss will be increased. It is better you sell at the split off point. So that means for product A, I will not do further processing because incremental revenue of further processing is 3 lakhs. Incremental cost of further processing is 6 lakhs. So 3 lakhs loss. So I'll sell all the units of A only at the split off point. For B and C, yes, I need to work it out. Other information is as follows. Product C is a byproduct, and the company accounts for the byproduct at net realizable value as a reduction of joint cost. Further, product B and C must be processed further before they can be sold out. Find out the joint cost allocated to product A in the month of July if the joint cost allocation is based on NRV method. We need to find out the NRV of A, B, and C. So A will be selling at split off point. B and C, what is your NRV? That we need to calculate. Okay. Now, B, you can select further processing, right? How much is the revenue? You'll get 6,000 into 350. 21 lakhs. What is the further processing cost? 6 lakhs. So how much is the net realizable value of BMO? 15 lakhs. Product C, 9 lakhs minus 3 lakhs. How much you'll get? 3 lakhs. What is the total processing cost? 33 lakh 60,000. So out of this 33 lakh 60,000, joint product cost is 33 lakh 60,000. So C is accounted as a part of reduction of joint cost. Joint cost to be allocated, right? Now how much I'll allocate, sir? Out of the 33 lakh 60,000, what is the CMR? C is a byproduct and this is reduction from the joint cost. What is the NRV of C? 3 lakhs. So what is the joint cost to be allocated to A and B? 30.6 lakhs. Okay. So 30.6 lakhs, you are allocating on the base of NRV. Correct? What is the NRV of A at split of point 3000 into 200? 6 lakhs. What is NRV of B? 15 lakhs. So you need to allocate the 30.6 lakhs on the base of 6 lakhs and 15 lakhs. How much you'll get, 30 lakh 60,000 divided by 21 lakhs. How you got this 21 lakhs? Tell me. Today my pen is give me a lot of problem. So if it is 30 lakh 60,000 divided by 21 lakhs into 6 lakhs. How much joint cost to be allocated to AMA? 8 lakh 74,284. How much to be balance amount? Okay. So I think this is what they have done in the solution also. So sales value at 12.6 lakhs, 15 lakhs, 3 lakhs. Since C is a joint cost byproduct. So ultimately, what is the total value of 30 lakh 60,000 is allocated between A and B on the base of their NRV. NRV at the split off point, 6 lakhs and 15 lakhs. Clear? Right. Let us go to question number 11. 11 is from service costing, one important question chapter where you get good amount of marks. This question is simple enough, fleet of buses. So I'll just explain it. You can do it. Okay. Royal Transport Services runs fleet of buses within the limits of Jaipur city. The following are the details which were incurred by the company during October 2021. Cost of each bus 24 lakhs. Garage rent. Yesterday, one student asked me, sir, where should I use standing charges, running charges, maintenance charges? Where should I use fixed cost, variable cost, and semi-variable expense? If you are preparing operating cost, and if you are doing in terms of overheads also, it is better I advise you to use only standing charges, running charges, maintenance charges. Okay. Standing charges, which are of fixed, maintenance charges, running charges is about more like variable cost. Maintenance, what repairs and maintenance. Okay. Cost of each bus, which is as a part of depreciation, you'll get garage rent, fixed cost, standing charges, insurance standing charges, road tax standing charges, manager salary standing charges, assistant salary standing charges, supervisor salary. If it is 2 into 32,000, 3, 24,003, driver salary 25, cleaner salary 20, Office staff 1 lakh. Consumables, which is comes as a part of maintenance. Repairs and maintenance. Other fixed expense 72,000. Diesel, oil and lubricants. Tires and tubes. Depreciation is 10% on cost. Other details are as follows: 12 buses with 60 passengers, 13 buses with 50 passengers. So each bus makes 4 round trips a day. 4 round trips coming and going. If it is only trip means one side, round trip means going and coming back. Covering a distance of 10 kilometers in each trip, one way. That means 4 round trips means 10, 10, 20 into 4 times 80 kilometers. During trips, 80% of seats are occupied. So occupancy is only 80%. The annual record shows that 5 buses are generally required to be kept away from the routes each day for repairs. So average buses is only 20. You are required to calculate cost per passenger kilometer. Cost sheet to be prepared on the basis of 25 buses. So we need to prepare for 25 buses. So all the cost. So once you work out the total cost, you need to divide with the passenger kilometers you'll get. So depreciation. So how much amount? 24 lakhs is right. 10% is depreciation. And we are working out for a month, October month. So that is the reason 1 by 12. And this is for one bus into 25 buses. Garage rent is for 25, insurance. So this is all incurred, right? So insurance, road tax, manager salary. If it is 2, if it is 3, should work it out. So running charges, how many kilometers are that is there in the working note. So 27,000, 12 buses, which is of 60 passengers. How many kilometers they work? 10 kilometers means 80 kilometers every day. How many days? October means 31 days. Very important. 12 buses. So 29,760. 13 buses means 32,240. But it is as if 25 buses are running, but you always says 5 buses. I don't know which buses, whether it can be 60 passenger bus or 50 passenger buses. So that is the reason 5 buses is kept. It is not given specifically. So 62,000 is for 25 buses. So on average basis for 20 buses, it is 49,600. So you need to calculate diesel cost only on 49,600. So this is one beautiful question. So mileage, I think 10 kilometers is the mileage. So 10 kilometers per mileage. So into 80 rupees is the diesel cost. Oil and lubricants that they are given direct 1 lakh 45. Tires and tubes they are given 35,000. Now important point here is that first one is October month, 31 days. Buses, 5 buses kept outside. Which buses they didn't say. So find out the total buses. If it is for 25 buses, how much would be for 20 buses? Clear? Now, when it comes to passenger kilometers, so total 29,760 kilometers into how many passengers? 60 passengers. And it is only 80% occupancy. So you'll get 27 lakh. So 14 lakh 28,000 for 12 buses. 12 lakh 89,600 for 13 buses. So how many passenger kilometers? 27 lakh 18,080. So what is the cost for passenger kilometer? Total cost divided by passenger kilometers, 27 lakh 18,080. But the logic they should apply here is that I will not travel 62,000 kilometers. I'll travel only 49,600. So based on that, my passenger kilometers will also be changed, right? So, but cost it to be prepared on the 25 buses. So diesel will not, maybe today one bus will run, other day another bus will not run. So here's last point they said as cost it to be prepared on 25 buses. That is the reason we have taken passenger kilometers for 25 buses. But if it is logic, I should calculate only for 20 buses only because my passenger kilometers will not. Unless if I don't travel, how passenger kilometers will come? So I think this also you should take it divided by 25 into 20. So based on that, we need to calculate the cost per passenger kilometer. Okay, so I'll write an email to ICMA. I'll get a clarification on that. But they said they are working on, they kept repairs for every day. So obviously my passenger kilometers will also change. So this would get changed. So better you write an alternative in the examination. You write assumption that if the passenger kilometers will get also affected because of repairs. So on average basis, if it is 27 lakh 18,080 for 25 buses, how much would be for 20 buses? 21 lakh 74,464. Based on that, you work out the cost per passenger kilometers. Better we be safe side. Otherwise, what happens? So don't assume that RTPs are prepared by institute, whereas your solutions, your exam papers are prepared by outsiders. So don't think that whatever the answer given in RTP and institute materials are correct. No, because when the examiner prepares the question, he will only give the solution also. Okay, so be careful in writing the solutions. So don't always assume that okay, in RTP or institute this is the answer, so this is only correct answer. No, so that you can change it. Write an assumption. You write both. That would be will save you. Okay, right. Let us go to question number 2, our favorite chapter from standard costing. Ahan Limited manufactures a system of standard costing in respect of one of its product AH1, which is manufactured with a single cost center. Details of standard per unit are as follows. The standard material input is 20 kilometers at a standard price of 24 rupees per kilogram. So standard quantity is 20 kilograms and standard price is 24. Standard wage is 72 rupees per hour and 5 hours are allowed to produce 1 unit. What is the standard hours required for 1 unit? 5 hours. Standard wage rate 72. Fixed production overheads is absorbed at the 100% of wages cost. During the month of April 22, the following was incurred. Actual price paid for materials, how much amount? 22 per kilogram. So you'll get material price variance between 24 and 22. Direct wages cost 43 lakh 92,000. Fixed production overhead was incurred 45 lakhs. Here it is 100% of wages cost. Analysis of variances are as follows. Material price variance is given 4 lakh 80,000. Material usage variance is given 48,000. It is better I take in the notes, Amma, because if you are our student, you would have can do it this one. Otherwise, you may get confusion. So that is the reason I am working out here. So what is given? So I'll put question number 12. So material material cost variance. Standard quantity into standard price. Actual quantity into standard price. Actual quantity into actual price. So what they said, standard price is how much amount? 24. Actual price is 22. Material price variance is given 4 lakh 80,000. Difference between these two, 4 lakh 80,000. Whether is favorable or favorable. Material usage variance 48,000. This is also favorable, right? And Labor rate variance, labor efficiency. So that also will try to work it out. Labor cost variance. Stand hours into standard rate. So rate variance between these two, 69,120 adverse. Efficiency variance 33,120 favorable. Fixed overhead production overheads. Fixed overhead absorbed overheads. So I'll put budget fixed overhead, actual fixed overhead. Expenditure variance between budget and actuals is about 1,80,000. Fixed production overhead cost incurred. How much have incurred actually? 45 lakhs. So can we work out this budget fixed overhead? What is this 1 lakh ATM of favorable or adverse? So it should be 46 lakh. 43 lakh 50,000. Because it is adverse, actual should be more. Now, what is other information given? What did they ask you one by one? First one is about material cost variance. Some of these two would be material cost variance. How much amount? 48,000 favorable, 4,80,000 favorable. So 5,28,000 favorable. Next question. Keep materials here. Budget output in units. Now, budgeted output, see here, how much is the expenditure variance? 1,80,000. How will you get budget overheads, budget fixed overhead, budget output into stand overhead fixed overhead absorption rate, FOH absorption rate. What is a budget fixed overhead? 1 lakh, 45 lakhs minus 1 lakh ATM. 43 lakh 20,000, sorry. 43 lakh 20,000 divided by, what is the fixed overhead absorption rate, Amma? How much they are given fixed overhead absorption rate? It is 100% of wages cost, 5 hours per unit. So 5 into 72. How much amount? 5 into 72. So you'll get budget output. So that is 43 lakh 20,000. 12,000. What is the budgeted output? 12,000 units. Right. So the same would be the 360. What is the next one? Quantity of raw material purchased in kilometers. Here, if you see, how will you get material price variance? Material price variance is difference between stand price minus actual price into actual quantity. So 4,80,000 divided by difference between these two, 24 minus 2, 2 rupees. So how much you're getting? 2,40,000 kgs. So this is also done. What is the next requirement? Actual output in units. Actual output in units. Now we can work out what is the actual from direct labor variance. We can work out this. What is the total actual direct wages cost? 43,92,000. Correct? So then you'll get, can you work out this one? It is adverse. So that means 43,92,000 minus 69,120. Okay. Then with 33,120, what is stand hours? Stand hours for which output? Actual output. Please be careful here. It is 5 into 72 for which output? Actual output. 43,22,800 minus 33,000. You should add it because you're getting favorable. 43,56,000. 43,56,000 divided by 5 divided by 72. Or you can use workout by being absorbed overheads also. We get this information. 12,100 units. Okay. Here also you can work out stand quantity for actual, but they are given how many KSM stand quantity for actual output? 20 kilograms. You can use by using this also. So 2,40,000 KS here. 2,40,000 into 22. Actual quantity 2,40,000 kgs. So by using here, you can get here. And if you get stand quantity for actual output, you can get it out. So 552,80,000 minus what is favorable cost variance 5,28,000. So you'll get here plus 5,28,000 divided by 24 divided by. So if you get, you can work out by using stand quantity for actual output also. But we can work out based on labor cost variance. Because stand hours is for which output? Stand hours for actual output. So then we have worked out this. Okay, 12,100 units. What is the next question number? Actual hours worked. What is the actual rate? Did they give you any actual rate? So if you want, you can work out by using stand quantity also. So 52,80,000 plus 5,28,000 if you add, you can check it out. 58,08,000 you are getting. So that is for 20 kgs. Cost of how much? 24, right? Divided by 24. You'll get same 12,100 into 20. So either by using stand hours, because I said on the first stand hours means stand hours for actual output. So don't forget the three principles of stand costing which you have discussed. Very, very important. Okay. Actual hours worked. Actual hours worked by using this, you can work out. So this is actual hours into standard. What is standard? 5 into 72. So you can work out actuals. 43,22,880 divided by 5 divided by 72. So 12,800 into 5. 60,040 hours. 60,040 hours. Clear? Next question. Actual wage rate per labor hour. What is the actual wage rate per labor hour? 43,92,000. So actual hours is almost 12,000. It is one by one combination into price. So 43,92,000 divided by 12,008 divided by 5. 73.15. See, if they didn't ask you first question, this one, they should ask this one, then they should ask this point. Okay, one by one. Labor cost variance 43,56,000 minus 43,92,000. I think this is a simple question they are given in standard costing. We have worked out three variance model, everything. 36,000 would be the adverse would be the labor cost variance. Last point, production overhead cost variance. Production overhead cost variance between these two. So absorbed means what? Absorption is based on which output? Actual output. What is your actual output? 12,100 into 360. So please link one by one. Don't forget any concept. This is a combination of material, labor, overheads. If I do only materials and labor, sir, I'll go to the examination. You should do overheads also. Very, very important. 43,56,000 minus 45 lakhs. 1,44,000. 1,44,000 A adverse. That is a production overhead cost variance. So that is the reason, sir, we have discussed in detail about standard costing. Please do not neglect any question. 10 marks would be in your pocket. That is the assurance I can give you with relate to standard costing. Whether standard costing, marginal costing, activity-based costing, service costing. So all chapters we are making it simple. So please focus. Please understand when I say about absorption, absorption is based on which output, actual output. When I say stand hours for which output, actual output. When I say stand quantity for which output, stand quantity for actual output. If you understand that, if you keep that points in mind, one by one we can do it, and it is very simple if you do the missing figures question, right? Next question. Marginal costing question. Okay. RPP manufactures. It is a simple question. I think there are two parts in marginal costing. RPP manufactures is approached by an international customer for one-time special order similar to one offered to its domestic customers. I said there is one question. Domestic price can be different and the international price different because both the customers are of different. Per unit of data for sales to regular customer is provided below. 693, direct material, direct labor 315, variable manufacturing support 504, fixed manufacturing support 1092. 50% market target selling price is 3,906. It is provided that RPP manufactures as excess capacity. When there is excess capacity, even if I can recover variable cost, even a rupee, even a paisa more than variable cost, it would add my profit. But it should not affect our domestic customers. What is the full cost of the product per unit? What is the full cost, Amma? 2,604. What is the contribution margin per unit? So selling price 3,906 minus variable cost. Variable cost 693, variable labor 315, variable manufacturing support 504. How much amount? 2,394 is the contribution. Which costs are relevant for making the decision regarding the one-time special order? One-time special order, what is the relevant cost? Relevant costs which are for decision making. Okay, direct material is relevant, direct labor relevant, variable manufacturing support relevant. So these three are relevant for our decision making. What is incremental cost? All incremental costs are relevant for our decision making. So 693 plus 315 plus 504. 1512 is the relevant for decision making. For RPP manufacturers, what is the minimum acceptable price of this one-time special order? Any amount more than 1512 is acceptable for short term. Because even a rupee I get more than, because I have excess capacity. I'm not selling in domestic market because domestic market prices will not affect. If you see one question we have in our material also. If you wish, you can go and see Amma. If you want that question, if you want, I'll show you that. If you remember, I would have discussed that question. Remember that question would be 23 question. If you see, will advice be different if the customer is local one? There I have discussed. Okay, right. So anything if it is more than 15, 12, if it is more than my incremental cost, that is acceptable. For this one-time special order, should RPP manufacturers consider a price of 2,100 per unit? Why not? You can consider because anything more than incremental cost, you can take it for decision making because this short-term order, one-time order. That too for not for domestic market. Okay. That is only solution given. You can check it out. Next question, 13B. The lab corner of New Life Hospital Trust operates two types of specialist MRI scanning machines, MR10 and MR59. The following details are estimated for the next period. Running hours 1100, 2000 for MR59. Variable running costs excluding special technology 68,750, 1,60,000. Fixed cost is given. A brain scan is normally carried out on mission type MR10. This task uses special technology costing 100 each. Special technology because running cost is 68,750 plus 100 rupees for special technology and takes 4 hours of mission time. Because of this nature of process, around 10% of the scrams produce blurred, therefore useless results. So 90% only effective. Calculate the total cost of satisfactory brain scan on mission type MR10. Now tell me, let us assume that if 1,000 hours are worked, 10% of the time is wasted. Correct? How much amount? 10% of the time. What is the variable cost? How many hours are we are working? 1100. So 1100, what is the cost for each hour of mission? 68,750 divided by 1100 hours. Fixed cost 50,000 divided by 1100 hours. So you are getting cost of brain scare for MR10. How much amount? Somewhere about 40. How much amount? So we have got fixed cost and variable cost. I'll go to the solution also. I think PDF I have some issue. So variable mission cost, how many is take 4 hours? 4 hours into 62.5. Special technology 100 rupees. Variable cost 350. Fixed mission cost 4 hours into 45.6. So total cost is 531. But cost of satisfactory out of 10, only 9 will work. Out of 100%, 90% is correct. That means the 10% cost, I should recover it from the good satisfactory scan. So 531.84 divided by 90% into 100%. How much you're getting? 590. Because, sir, I need to give allowance for blurred one. So that is the reason I'm dividing 531. For example, if 100 scans are I've done, you would have incurred cost for 100 into 531.84. But ultimately, out of 100, how much you will get exactly out? Correct one, 90 only. So for 100 cost, you should recover it from the 90 scans. That is what I did for 531.84 divided by 0.9. That is 90%. Or you can assume 531.84 into 100 divided by 90. You'll get the same answer. Okay. Now, second part. What did I ask you? Second part. Brain scans can also be done on MR59. It would take only 1.8 hours per scan with a reduced reject rate of 6%. So only you have a reject rate of 6%. And however, the cost of the special technology would be only 137.5. Earlier it is 100, is 137.5. Advise which type of mission should be used, assuming sufficient capacity is available on both the type of missions. Consider fixed cost will remain unchanged. Now, what is your MR10 cost amount? 1,60,000 is for how many hours? 20 hours. So 1,60,000 divided by 2,000. So 1,60,000 divided by 2,000 into how many hours it is taking? 1.8. So 144. Special technology 137.5. Fixed cost, how much is the fixed cost amount? Fixed cost is 243,750 divided by 2,000 hours. 121.875. So fixed cost remains the same. Huh? Now, what is the variable cost of satisfactory send? So fixed cost is same. So you have assumed that fixed cost will remain unchanged. So we are working only comparing the variable cost. 281.5. What is the rejection rate? Only 6%. So divide by 281.5. If it is for one scan, if I take it for 100, ultimately you are getting good only for 94. So 281.5 divided by Understood? Divided by 94 into 100. How much? 299.47. What is the variable cost here? 388. What is the variable cost here? 299.47. So that is the reason MR59 would be cheaper. Correct? Did we do the same? What is the variable cost? 350. And 350 is for without any errors, but there is errors, right? So 350 divided by 90%. So you are getting 388. Here 299. So MR59 is the cheapest one. Okay. Now let us go to the next question. Budgets and budgetary control. My PDF is giving me a lot of trouble. So what did they ask you? You are required to calculate the following ratios. Hope you are very familiar with these ratios, right? Efficiency ratio. How will you calculate efficiency ratio? How will you calculate efficiency? It can be calculated based on hours or it can be calculated based on output. If it is calculated based on hours, it is stand hours by actual hours. This is based on output. Simple logic. Sir, I should complete in 10 hours. I completed 9 hours. Should my ratio be more than 100, less than 100? More than 100. It should be 10 by 9. 10 is what? Standard time. 9 is what? Actual hours. So stand hours by actual hours into 100. If it is output, actual output divided by stand output. Activity ratio. Capacity ratio into efficiency ratio is equal to activity ratio. That also you know. Calendar ratio. Available working days divided by budget days. Standard capacity usage ratio. Budget hours divided by maximum possible hours during the period. Actual capacity usage ratio. So actual hours work divided by maximum possible hours during the period. Actual usage of budget capacity ratio. That is based on budget. Actual hours divided by budget hours into 100. Did we find anything difficult? This is all the question we have done. Just revise it. Miscellaneous. Health Wealth Hospital is interested in estimating the cost of each patient stay. The hospital offers general health care facility, only basic service. You are required to calculate the following costs, either direct or indirect, with respect to each patient. Classify each of the following costs as variable, fixed or variable with respect to hostel cost per day. No, electronic monitoring. It is a diet to the patient. Meals for patient, as it is direct. Nurse's salary, indirect. Parking maintenance, indirect. Security, indirect. When it comes to it is fixed or variable, electronic monitoring is what? It is a variable cost. Meals per patient is also variable. Nurse's salary fixed. Parking maintenance fixed. Security is fixed. Simple question. Difference between cost control and cost reduction. So one is a preventive one is a, you remember in the first chapter we discussed one cost control is preventive action, cost reduction is corrective, which is permanent in nature. Cost reduction is permanent in nature by using the techniques of Kaizen costing, target costing, etc. Cost control is only for the temporary measurement. Okay. So ultimately cost control, simply compare with standards and say reduce the cost, reduce the cost. So that is about cost control, cost reduction. So this is a question which is, so don't neglect theory part in the examination. Surely it will have impact. I don't know why my scrolling went out. So instead of, I actually says you write the base of difference, then write cost control, cost reduction. So surely it will give you marks. Cost control is maintaining the cost with established standards. Cost reduction endeavors the challenge. It is challenges the standards. So cost control seeks to attain lowest possible cost. Cost reduction will result in lower cost as a permanent in nature. Cost control is always focused on past and prevent, whereas cost reduction is present and future. Cost control is preventive function. Cost reduction is corrective action. Cost control ends when the targets are reached, but cost reduction is continuous action. There is no visible end. Even a small change, that is we call Kaizen casting, we need to do it. Next part. The cost accounting and management accounting use synonymously, but there are few differences. Elaborate these differences. So that also we have question. we have discussed in question number 1. So management accounting is broader one and compared to cost accounting. So nature, cost accounting only on the quantitative, management qualitative also. Like let us assume that, sir, if I take a decision, I can gain in financial, but I have reputation effect. Management account consider both. So when I work with management accounts, you do lot of things. I said in my class also what management accounts really does. Objective area recording, development, rules and regulations. So the management account is more on the perspective of management. So what are cost units, Amma? So it is a for which cost is what are the basis? Automobiles, numbers, they ask you steel, tons, cement, bags, chemicals, liter, gallon, kilometer, power, kilowatt hour, transport, passenger kilometers, absolute 10 kilometers. So, okay. So that is what we have done in the service cost. So it is a simple question. So this is there in our service costing chapter, correct? Because even it is there in the first chapter, but I request you to work out even in the service costing chapter. Okay, so from hotel, school, hospital, accounting firm, we have worked out, right? So, dear students, so before I conclude the RTPs, so the extent possible, what is the difficulty in each question I've explained? You please revise it. And before that, you don't forget to mark it as ABC. This is what really helps in your examination. As a 5 times surrender encoder in CA and CMA, I said many times, please mark A category, B category, and C category. It is not about importance. It is the time taken to revision. In the before examination, if you filter, if you assume A is difficult, B is little difficult, C is easy. You focus only on A and B, do theory and go to the examination. You should able to cover 25 hours will be there between one examination and another examination, provided if there is no holiday. You should able to focus all these questions, read theory, go to the examination with 100% confidence. I'm sure that your result will be there. You'll come with flying colors. My best wishes to everyone. So if you have any doubt, please reach out to me. I'll help you out. Thank you. And please give a feedback about the classes in a Play Store or in Telegram app so that it would be conveyed to the other students as well. Thank you. There are many students who has given feedback from Kerala, Karnataka, Tamil Nadu, Andhra, Telangana, from different parts of the state, country. So if you give it, it will be reaching to other. And if you have any query, please reach out to me. I'll surely help it out. Thank you.